All right, so we're going to do another video here, two back to back. I'm going to release this one a bit later. Before I get into it, this is going to be on bonds and what I'm looking at in a high yield bond that's still TLT. Come to ztrades.net, check out the terms and conditions page as reader disclaimer and our terms and conditions. If you don't agree to it, don't watch this video. Don't join the Discord. If you do, feel free to join the Discord and feel free to watch this video. Let's get in it. I am tired right now. I've been going since 6 a.m. It is 9:15 p.m. I've been in this chair ever since. We're going to get to TLTW in a moment. Let's check out bonds. I slightly went into it a little bit in the last video. We're going to really get into it in this video. I'm going to talk about, before I discussed why I like them and where they're going to go and their relationship with yield, right? QT and QE. I'm going to talk about my plan in investing and my entry and my exit, as well as options. Am I going to do options? What exactly am I going to do when bonds are going to go up? What securities and what instruments am I going to use and methods to make money, right? So a lot of people think, now again, we're going to go over it again for the people if you didn't just watch my last video. All right, I'll make it really quick. Interest rates go up, yield goes up, face value goes down, meaning the bond dropped. Right shoulder, head, left shoulder, head, right shoulder. Head and shoulders, quantitative tightening, we dropped. The pop, quantitative easing, cutting interest rates, face value explodes, yield goes down. Raising interest rates, yield goes up, face value goes down. Let me refine that. We cut interest rate, it goes up. We raise interest rates, it goes down. That's simple, all right? I'm not going to sit here explaining the mechanics of that for the next half hour. You guys can research that on your own if you'd like to. I like to make my videos very short, very blunt, and to grasp everybody's attention. So we bounced off 2002 lows, right off this line. I bought a little bit early, right over in here, right around here off this pivot, and I'm like, are we really gonna hit that low? And it did, and it started to suck up, and then I bought it again. I didn't want to wait, because there's been times in the past when the market got just clobbered. And I did a good job at buying during COVID, and I was so focused on it, like kissing a line that I drew, not realizing it's like, good God, this thing has gotten smoked. It's fallen from right there all the way down here, and then I'm focused on telling myself here, it's time to just start buying, right? I didn't get the perfect entry. Really wasn't looking at it too much. Was taking it with a grain of salt, easing in. I've built a pretty good position. When we started to peel back over here, and on this bull candle, I added more there. So I'm sitting pretty right now. And it's pushing up in anticipation of rate cuts, right? Because the dollar's been dropping. Let's take a look at the dollar. Hey, there's where we cut interest rates and TLT exploded. There's where we raised them and TLT dropped. We have a bearish rectangle right now. That's what this pattern is. It is a bearish rectangle. Okay. We do have a 1, 2, 3 reversal here, which is odd, very odd, because we're supposed to be cutting, and this is a monthly, we're supposed to be cutting interest rates. Sure, it could fail. It could absolutely fail. And plummet, but we do have the 50. Oh my God, guys, am I tired? I've been here all day, like I said before. We have the 50 right here, EMA, and it's holding it, and we're at the bottom of this rectangle, and we have a 1, 2, 3 reversal, so that does say that we're going to bounce. We'll see. About to have an EMA cross right there, but overall, this is a bearish rectangle, and I expect us to plummet at some point. Sure, it may take a couple months, it may dance. But overall, I expect us to crack out of this and come down to this level over here to 96 on Dixie. All right, ZROZ. TLT is 20-year treasuries. Zeros is treasury strips. Treasury strips are a little bit more long-term. They are more interest rate sensitive, meaning they move harder and react harder to what the Fed does regarding interest rates when they raise interest rates or they lower interest rates. And this thing during COVID at the peak, I was in calls on this spike right here. It wasn't on TLT. I swung a call on TLT, and a call on TLT 1 went up $1,500 in a day. Like, that's never happened. That doesn't happen. I don't think you can choose any of them under any condition normally and have it move like that. That is just ridiculous. And it was not a same day. 1, and it went up 15. I remember opening it up and being like, oh my God. At the time during COVID, the amount of money I was making was just ridiculous. I was doing strangles on Apple every freaking day, and SPY and the Qs, and eventually those went away, and you had to target equities where the premium, the IV wasn't too jacked, right? And I would just do a strangle every freaking day, and Apple would have like a $10 move, SPY would have like a $20 move. It was bananas. And I remember buying calls on TLT because we went into heavy quantitative easing, very heavy quantitative easing, and I had nailed it on somewhere inside here at this month. So, but excuse me, guys, we were at 203. It was actually a little bit higher, and we plummeted down to 62. That is insane. That shows you how rate sensitive this is. TLT didn't do that. It went from 171 down to 84, if I remember correct. Yeah, I'm correct on that. This went from, it was higher than this. It was like 207 at one point. It isn't going to register it here. And we went down to 63. That is a crazy drop. Even 63 to 83, that's a $20 move. You made $20 per share. You bought 100 of those. It's like it's free money. Now, I expect us to easily hit the 50, right, which would give us 101. And I do expect overall for us to peak out, because I don't expect, depending on who gets in office, I don't expect rates to go too hard. Inflation may keep ticking up depending on what the government does. Is the government going to cooperate with the Fed? Are they going to team up like under Reagan and Volcker and really get inflation under control from the back end and the root causes, government spending, right? Or are they just going to be like, hey, Fed, raise interest rates, which hasn't really worked. They had to change the metrics. So this would be my target, 115. Am I going to trim before there? What I'm going to do is I'm just going to hold it until we hit that target or inflation starts to come in hot. Then I'm going to be like, whoa. I think I don't want us to go back into quantitative tightening. They did do this. So when people look at, what was going on with inflation back in the early 80s, they didn't realize that we went through what they did in the early 80s and the 70s, and they just gave up on it and let inflation run under Carter. And then when Reagan came in, new Fed Chair Paul Volcker, that's when they came back at it to hit it again. I'm really sorry, guys. I am really tired. So, what's my plan? Let's get into that. How much time are we in? We're 9 minutes in. So, am I going to do options? No, because they rot. Am I going to do TMF, which is leverage? Jeez. They've had a reverse split at 582. That looks freaking hot. That looks hot. With bonds not moving at all, this is going to rot and go down. I mean, it's got decay on it. I don't want decay. God, does that look... Oh my gosh, that actually looks really freaking good. If they were going to do back-to-back rate cuts every quarter and then didn't tell us and they said, we're going to see next quarter, right? But we are probably going to be cutting interest rates pretty heavily. We don't know if it's every quarter or something like that. We're going to be doing it. This thing would probably get a decent pop. This could go nuts. I don't, it's not like the levels really work like an equity because it does decay. So I don't expect too much of it, but that does not look bad. That's very tempting. If we could get a big drop on that 44 and it shot up to 62. I'm not going to get lured in on TMF because every time I touch it, it just won't go and it gets cooked. So no, I'm not going to touch TMF. No, I'm not going to buy options on TLT. Can you buy them on 0Z? No, because the spreads are wide. Maybe you can. I'm sure you could find one. Am I going to do it? No, I'm not. If I were to buy options on any of them, the three I'm talking about here, it'd be on TLT. Why? The options are more liquid. There's more volume there. The spreads are tighter. They're healthier, right? Volume high. I'm simply buying, I'm already in it, TLT equity. I don't think I'm going to add anymore because I've got a lot of it, like a boatload, like enough to put a down payment on a house in TLT equity. I am going to get back in Xeros. I should have not sold it. Right? I did this stupid thing and I forgot about it because I've got a million things going on in the market, which is okay. This is the mistake that everyone makes. Okay, it's going to drop here, right? I think it has more. Let me exit and I'll come back, and after it drops, I'll enter. And they never get back in, like in the '08 crash. A lot of people sold and they never got back in. Right? If you sell, you have to be watching it for an entry because you don't want to get left in the dust, because the second it starts shooting up, you're like, well, I'm not going to buy it higher than where I sold it. And then it just never stops. And then they'll end up buying the top, then it pulls back, then they sell it, and it goes back up again. Right? So this time we've hung out and consolidated and came down and respected and bounced off these EMAs. That's something I want to be looking at. Okay? I'm already done adding TLT equity. I'm going to add some Xeros. 0Z. What's the other one? TLTW. Now keep in mind, to say that this thing can jump in this gap, it definitely could. We have a gap there. It doesn't really, you got to take that with a grain of salt because it's a Drixen fund, and they're writing options on this, so the upside is limited. So is the gap fill possible? I'm not sure. If we do get some steam, I definitely think we could see, oh my gosh, $30, possibly 31. Now that's a big deal going from 27 to 31, especially when the yield it's around 12%. It may be a little bit more, between 10 and 20% yield, because they're writing covered calls on it. So the only way you would touch, in my opinion, doesn't mean I'm right, not financial advice, like I said at the beginning of the video, check out the disclaimer in terms and conditions, I'm getting my train of thoughts off here. I apologize, guys. I am so tired right now. Is if I'm expecting it to go up. Like, I'm not just going to buy Microsoft's fund that they write options on. Because you know how they have TSLY, MSFY. They have one for Microsoft, Amazon, Apple, Tesla, NVIDIA, AMD, PayPal, but for Bitcoin as well. But why would I want to do any of that? Or they have Beto, that's not the same. Why would I want to do any of that if the fund's going to run flat? Because that means it's going to drop violently because they're writing options on it, which are going to hinder the upside. So all of their funds don't really ever go up, right? We can put in TSLY. Right? If you put this on drip, it's just going to drop and never stop. And it's just going to keep dropping and dropping and dropping. It has to be something that's going to be going up. Like when Coinbase was going up, well, this may be a buy for me here coming out of September, because the yield on this is ridiculous. But TLTW, this thing's actually holding up better than the rest of them. But TLT is not necessarily, it's not in the S&P 500. It isn't in equity. It's not a company. It's not going to drop with everything in September. It's going to basically go off what rates do, what the dollar does, right? And the year and the 10-year and all that. So, and what the Fed's going to do, and we're expecting rate cuts. So if we start cutting rates and they're saying we're going to keep cutting them, I really expect this thing to go up. So this is what I'm going to be adding: 0Z. And I'm also going to be adding TLTW because the yield on this is fat. And I could throw a decent amount of money in here and get a whopping return back. So again, when it comes to TLT, TMF I'm not going to touch. It has rot. If I'm going to be anything with rot, it's going to be TLTW. Not that it has rot, it just has hindered upside. The rot on TMF hinders the upside, so they both have hindered upside, but for different reasons. One's for a good reason on TLTW because you get a fat yield. You actually get something back, unlike TMF. And I'm not doing options on any of these. I own TLT, I'm adding Zeros, and I'm adding TLTW. So adding TLTW and adding ZeroZ. Exit strategy is either targets that are hit, right? First target would be around 115 in my opinion. What chart was I looking at? I may have had something different up here. Let's take a look at this. 111, this gap fill, as well as the 50 EMA, right? That's kind of like right in line right there. I may take some off there, but what I'm really looking for, I'm just going to hold it, to be honest. What I'm really looking for is for them to be finished with quantitative easing, or the warning signs that they'll be finished with quantitative easing. So you could either go by targets, or you could go by reading the numbers, right? And those numbers would be, oh crap, inflation's roaring back up again. And it can be looking for those warning signs. It depends on, number one, who's going to get in office, right? If we really want to get inflation down. And two, what's going on? What are the numbers? We need to look at PPI, CPI. We need to look at all of that. We need to be focusing on everything at 8:30 and 10 o'clock in the morning, seeing what all the data says. And if inflation starts to tick up heavily and they're starting to have talks and rumors, and we're hearing whispers and comments made by this person and that person about quantitative easing stopping, it's probably time to go ahead and start, in my opinion, trimming. What I would be out of first is the most interest rate sensitive, the riskier stuff, which would be TLTW, since it has limited upside. I may be out of that, especially Zeros, since it's so interest rate sensitive. The second they stop cutting interest rates, I expect it to, at best, run flat from there. So, yeah, that's my plan here on bonds. And if they're really going to do what they say they're going to do, and they're going to hike in, or they're going to be cutting interest rates through 2025 and possibly into 2026, we could be along for a wild ride. You know, we could come all the way up in the 120s, right? That would be fantastic. We could come up over in this range right here. You know, 118, right in this range where this hung out for all those years. That would be great. That would be fantastic. And jump out of that and roll into the next thing, depending on what that is. It's going to be very hard rolling into something else in the future here. I don't know what that's going to be, because I already have such a fantastic position in gold and silver as well, and SLV and IAU. I like IAU better. Expense ratio is a little bit better, and it's cheaper for averaging down purposes. It's a great one. We'll get into that in another video. But I'm very my main focus is gold, bonds, metals, bonds, and Bitcoin. Those are my main focuses going into rate cuts in 2025. All three of those are interest rate sensitive. So why, if we're going to cut interest rates for around a year and a half, why wouldn't I be focusing on things that are interest rate sensitive? So if you guys like this content, make sure to like and follow for more.